Okay, so let's talk about title insurance. Title insurance commitments for title insurance, that's the first step. They're also called binders. And a title commitment is a document that sets out under what terms a title insurance company will issue title insurance on a particular piece of property. The format for the commitment was created by the American Land Title Association, and the title commitment gets prepared typically by the closing attorney. They're acting as an agent for the title insurance company, and that thus means that maybe the paralegal is the one who's actually committed preparing the title commitment. Okay, and the title insurance company will give you software to help you create these title commitments. But a title commitment is going to have some basic general language that is applicable to all of their policies. Then they'll have some language that is specific to this particular piece of property, and that information will become available after we do the title search. When we're looking at, what's the chain of title, who are the owners, the sellers, what encumbrances, what particular clouds may exist on the title. The title company is also going to, just as with a title search, they need to know about the tax records, the status of property taxes. If it's a commercial transaction, then they probably are going to rely on the survey, and then affidavits sometimes from the current property owner about things that affect the title. So who gets issued a title commitment? Well, as I told you last week, there are owners and lender title insurance policies. And usually when you have financing, the lender is going to require that you get title insurance. So you have to buy the loan policy, and it's just better off to go ahead and get the owners as well at that time, because it's a significantly reduced rate, usually a third to a quarter of what the lender policy is. And if you wait, you'll have to pay the full amount. So just as with the actual policy, there's also an owner's commitment and a lender's commitment. Okay, they probably going to be created at the same time, but they represent two separate issuances. Okay, so the commitment has a Schedule A, B1, and B2. A is going to cover general information about the title and the property. B1 is going to be those things that, so let's go back, I'm sorry. Schedule A is going to have the type of policy it is, who's the insured, how much money. Usually it's going to be for the purchase or the loan amount. Usually the lender policy would be the loan amount, and the owner's policy would be the purchase price and the effective date. Then on Schedule B1, they're going to list those things that have got to be corrected before they will issue a final policy. The person actually has to be buying the property. The taxes have to be paid. The current mortgage or the current loan needs to be paid off. And all of those things are going to happen prior to or at closing. Then, and this is the kicker for most insurance, there's going to be some exceptions to what they will actually cover, those things that they're going to exclude from coverage. And so that if something comes up down the road with regard to an issue with title and it's related to one of these exceptions, then the company is going to deny coverage. Things like the gap exception, like I said, with regard to title searches, that period of time in between the effective date and when we actually did our title search, any known encumbrances, let's say an easement that's already existing. We can purchase, or you can purchase endorsements which will address some of these exceptions to coverage, but that's for an additional price. Okay, so after we have the commitment's going to come pretty quickly after we do the title search, but before we have the closing. And it's a promise that the title insurance company is making that they will issue the final policy. Okay, so then when we get to closing is where we're going to get the official title insurance policy. This coverage is in the event that there has to be some action taken to defend against some adverse party, some third party that's claiming an interest in the property. Now, it does not cover any physical damage to the property. So if there's a fire or a flood, it is not that type of insurance. It's only related to the title of the property. It doesn't get recorded. It doesn't guarantee that you won't lose your property, but it's going to reimburse you if it's lost or there's some other financial loss. That's insurance. That's saying that you've gotten the owner's policy in addition to the lender's policy, because the lender's policy is going to make sure that that lender stays whole and doesn't lose out if there's a title issue. But if you want to be protected, you've got to have an owner's policy as well. So why do you need title insurance? Well, attorneys and their title searchers, examiners make mistakes. So there could be a mistake that they didn't catch something during the title search. The clerk may have recorded something in the wrong order or incorrectly. There could have been fraud or forgery from the person who sold it to you. Maybe they really didn't have good title. Especially when you're dealing with estates, it could come up that there is an heir that was not included when they probated the estate. So you could have a missing heir who shows up many years later and is claiming an ownership in the property. And we talked about the covenants in the deed that are there to protect. It's what the seller is promising to do, but that's not always enough protection to actually help us to be monetarily protected. So I've already talked about the two different types of policies, the owner's policy and the lender's policy. In a lender's policy, your coverage decreases as the amount of the outstanding loan decreases. So if the issue with title doesn't come up until the last 5 years of the loan, the term of the loan, then that's all it's going to cover. All the lender is worried about is them. If you want protection, you got to have that owner's policy, and it's going to protect the policy owner and any of their devisees or heirs as long as they retain interest in the property. There's no set amount in Georgia for the cost of title insurance. The range is from $1 to $3 per thousand of coverage. It's not greatly expensive, but it's certainly worth the investment. And like I said, it's always better if you can do that, do a lender's policy and owner's policy at the same time. The actual policy has the same kind of schedule format as the commitment. That Schedule A is going to have general information, B is going to have exceptions to coverage, those things that, so sorry, we're not going to cover unless you buy that additional coverage in an endorsement. And then there's going to be a jacket. They call it a jacket, but it's just kind of the piece of paper that goes with it, or it's as a part of the policy. It's going to have the standard terms related to policies. Title insurance is backward looking. Every other kind of insurance that we buy, health, car, home, it's forward looking. It's to cover things that might happen in the future. Here you're getting coverage for something that happened in the past, but it's coming back to bite you now. Okay, so some things that are covered, defects in title, if there's a lien or some encumbrance that was not caught, access to a public road. But those things that normally are not covered are if the governmental entity changes the zoning laws, if the property is seized by eminent domain, things that don't result in a loss, or things that happen after the closing that cause a title defect. All of those things are exceptions to coverage. Some of those you can get an endorsement for. The transfer of title insurance policies, it's not transferable from owner to owner. However, it is transferable from lender to lender, because very rarely is the original lender that you got your loan with still the lien holder 5 years later or 10 years later. But that lender's policy does transfer to the subsequent lenders. So if you have an issue that comes up with a title insurance or a title claim, you notify the title insurance company. If they agree that it's something that is covered by your policy, then they'll handle the negotiations. They will take care of any financial losses that that the homeowner incurs, and they will defend it if there's an action brought against you. Okay, so I hope that that helps you with Chapter 9, gives you a little bit better understanding. Please let me know if you have any questions. See you Thursday night.